After the Fed raised interest rates another 25 basis points on Wednesday, the market kind of had a lot of indecision and a lot of whipsaw going on. We're going to talk about what's going on in the market right now and what we should expect this week. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our weekly market recap webinar. My name is Chris. I'm with Riz International, and we are a group of traders who are looking to make our money work for us, not the other way around. And we do that through our community, Riz Elite. And if you're not in that, make sure you do get down in that description and get on the wait list for when we open up Riz Elite again. And also, if you are watching this replay on YouTube, make sure you smash that like and subscribe button. It really helps the channel grow. And also go ahead and click that bell icon while you're down there so you get alerted every time we upload new content here on the channel. So everybody was waiting for Wednesday. That is what the catalyst was, and we told you this last week. That is what you needed to watch for. So, we were expecting not what we got, to be honest with you. The market really spiked going into this rate decision because I think there were a lot of people who were expecting the Fed to either pause interest rates or even talk about lowering interest rates, which, if you understand what's going on with inflation, is absolute lunacy. And, well, the Fed did not disappoint. They actually did increase the interest rate again, another 25 basis points. Now, they had been talking 50, so this was a little bit less. But, of course, they were talking 50 before the Silicon Valley Bank failure and all of the concern over things going on in the financial sector right now. So, a lot of movement in the market going into Wednesday, a lot of anticipation that they were going to pause rates, and there was no pause. And we had a lot of whipsaw on Wednesday here in this rate decision. We were up at one point, quite a bit over 4,000, but then smarter minds kind of came in and like, okay, yeah, we are still raising interest rates, aren't we? And so we sold off. Now, what happened on Thursday was interesting. Quite a lot of indecision. The market was up, the market was down, couldn't make a decision, but we are holding that 200 simple moving average, the gray line here, which is a very significant support level for the market. And we kind of rebounded off of that on Friday with a bit of a buying spree coming in towards the end of the day. So it was a pretty big and exciting day. We were actually kind of expecting the market to sell a bit more and make a test of that 3,900 level. We got pretty close. We got to right around 3909.16, but just didn't quite breach below it. And then the 200 held, and we had a little bit of buying going into the close. So really kind of keeping an eye on the market here. And one of the things that we've been getting a lot is, Riz was telling me he was getting DMs on Instagram where people were telling me they were just losing their shirt in this market because of the lack of directionality. And it is very difficult to trade right now. And I think that if you're part of Riz Elite, you are doing pretty well for yourself right now because we have been preaching patience and not over trading. And that's a great way to not lose money in a market like this, because with these crazy whipsaw days, it's incredibly difficult to get a bearing on what direction the market is going. Now, you'll notice I have a new trend line here on the S&P 500. We're going to have to see if that holds up, but so far, so good. I have our old trend line here, which we've had on, which, of course, I was criticized for on in the YouTube comments. Feel free to continue to criticize me that you've seen this line before, but have you seen this one? I don't know. Maybe if you have, great. If you haven't, I'm going to go ahead and say that I'm the first one to put it on here. But yeah, we are still trending down on the market, even though we are kind of above that, support resistance line, that downtrend line that we had been on before. So we are going to have to kind of see what happens this week. Honestly, the best thing you can do right now is not rush into a bunch of trades. I think that's really going to be the key thing that we need to keep an eye on here and keep ourselves in check, because the patience, the money is made with patience, guys. Money is made in the waiting, and right now it's a waiting game. We have to understand what the market is going to do. If we're going to break out of this downtrend, then so be it. We can start looking at long positions. If we bust through 4,000 with some authority and, really make a solid move above that, that might be a good signal that the market wants to start going up. However, understand that the Fed has said that there is no thought process of ending rate hikes anytime soon. Now, they may slow things down, but that doesn't mean that they're going to stop. So again, our bias right now is more towards a downtrend. I know a lot of people have been calling for that for years. And they never really got it, especially in this meteoric rise coming out of the events of 2020, which shan't be named on this platform. But we are starting to get kind of that downtrend here. We're going to keep an eye on that, and based with all of the economic indicators and things like that, it really does signal that the market does need to come down a bit. We are very high up at this point, and some correction is due, in our opinion. So that is kind of where we're looking at. Again, I'm not trying to give you financial advice or tell you how to trade, but that's what we're looking at and where our opinion lies right now. But we do have a lot of technical indicators we are fighting right now. I did mention the 200 simple moving average here. We've got the 100-day moving average in the orange. And then, of course, we have our support levels here at 4,000 and 3,900, which have proven to be very important. We tried making a strong push over 4,000 and we just couldn't hold over it, even going into this rate decision where there was quite a lot of buying initially, and then the selling kind of kicked in. So we're going to keep an eye on this going into Monday, but guys, just be very careful right now. It's very easy to lose money, and that's the last thing that we want you to do. So let's go ahead and take a look here at the breakdown of the S&P 500 and look what we've got going on here. So excuse me, the S&P 500 or the SPY ETF is up almost 3% on the year. We're almost done with Q1. I can't honestly believe I'm saying that. It feels like we just had New Year's a few days ago, but not so much. Looks like communications and tech are really leading the way right now in the S&P 500, both over 15% up on the year so far. Consumer discretionary funds are up 10% so far, or goods rather, excuse me, and then everything else is below the zero line. Honestly, we've got consumer staples, we got real estate, we got healthcare, utilities, energy, and financials. Of course, financials getting absolutely wrecked with all of the uncertainty in the banks right now, and there's more talk about things going down overseas. So be sure you keep an eye on that, especially if you're looking at dip buying. Some of these banks could be a very precarious position. So just be very, very careful if you decide to go ahead and do that. It's not something that we are advocating that you do, nor would we tell you to do so. And we have no positions in any financial institutions at this time. But I do know a lot of people were talking about buying the dip and things of that nature. That is a practice you can do, but I would be very careful. If it were me and my money, I'm probably staying away from banks at this point, just because I don't really care for trading them and because of all of the uncertainty in the financial sector right now. But everything else is actually starting to perk up a little bit. All of these beat down securities, except for financials, energy, utilities, healthcare, real estate, and, consumer staples are actually kind of trending up over the last couple days. So nice little curl up there. We'll see if that continues or not as the market tries to make a decision on which way it wants to go. But really, tech and communications leading the way at this point. And one reason that energy is down is oil is just getting wrecked right now, really getting demolished at this point. Since about June of last year, we have been really in a downtrend on oil. We were in this nice little channel here between about 82 and 73, breached that last week, and we have stayed below it at this point. Looks like we closed on Friday right below $70 per barrel. So pretty low, all things considered, but things that are not low is gold. After a nice pullback, at the beginning of the week, we had a nice little spike back up over this 2000 area, 1967 if you're being specific. And that has been a very strong area of support and resistance for us in the past, but looks like we've breached over that and we are holding at this point. So we'll have to keep an eye on that. But gold making a really big run here with all of that uncertainty in the banking sector. A lot of people are moving back into precious metals as more of a safe haven for their wealth. Again, of course, gold really not a way to make money in the market, but more to preserve your wealth as opposed to grow it. So that's why we typically don't make a lot of plays on precious metals because they really don't give us the moves that we're looking for. But definitely something we should be keeping an eye on here, with gold making a nice push back up this week. And then here on the other financial things, we're talking about the government bond yields getting really demolished after Silicon Valley. We've tried to make some perks back up here, but even with the interest rate hike on Wednesday, which we're seeing here, moving into that, we just have really starting a downtrend here in the bond yield. So that is something we're going to be keeping an eye on. But yeah, as of now, right now, the 2-year is outperforming both the 30-year and the 10-year bonds. So lots going on in the bond world. Dollar-wise, really not making too much move this week. A little bit of a pullback, again, with concerns in the banking sector and things like that. It is impacting the the efficacy of the dollar, the strength of the dollar in relative to other currencies, but not a big move this week, to say the least. So really just kind of hanging out is what we're talking about here. Now let's take a look at our important financial dates this week, and really there isn't much of anything to talk about, to be honest with you. This coming week, we've got nothing. We've got personal income month on month, personal spending month on month, and the core PCE price index month on month. Really not huge indices that people are looking for. And then the following Monday on April the 3rd, we got ISM manufacturing PMI. Again, really not something that's going to push the market the way that the Fed announcement did last week. So really not much as far as big financial catalysts this week. So that's nice. We finally get a little break from that. We'll have to see if that helps push the market one direction or another. If you do have questions for all of our people who are here live, go ahead and start posting those. But I did get a question from one of our members. It was Jeff, if I'm not mistaken. Yes, Jeff says, hey, Chris, I'd love to hear your thoughts on what's happening with SQ. I'm considering some high 50s short puts this week as I have a resistance right at 60. All right. Well, let's take a look here at what's going on with SQ, because they had a rather, let's say, less than favorable report come out against them. Now, this is formerly Square, now Block, and we had a bit of a research done by the Hindenburg Research. Released this 2 days ago, and there were about 8 points that they came up with talking about SQ. Now, this used to be, we used to trade this stock all the time here in Elite. We haven't done so in quite a while, and we had quite that push from 2020, didn't we? Wow, what a recovery and a push here on SQ. We can see here in March where we dipped, and then just this meteoric rise right up to around 281, and we've just been bleeding ever since then. And then we had this little catalyst that came out, this little report here, and there were a few points I want to go through. The first one that they came out with is basically saying the Block has systemically taken advantage of demographics it claims to be helping. That doesn't seem very good. Also, interviews with former employees show that 40 to 75% of accounts are fake. Well, we know how that worked out with Twitter. Definitely not good. The report accuses Cash App as by far the most used platform for illegal payments. Cash App compliance issued, from a cash card under. They apparently issued a cash credit card under the name of Donald Trump, so that ought to get this video flagged by YouTube. Block basically facilitated pandemic relief fraud is what they were saying. And also Cash App avoided a key banking regulation, also not very good. And acquisition of Afterpay meant to avoid responsible lending rules. So basically, they're trying to cheat the system. And then everybody's favorite, Jack Dorsey, the former CEO of Twitter, and executives have sold over $1 billion in SQ stock. And after that report was released, they dropped about 20%. I can't blame them for that. So terrible report for this company that in the past had seemed to be pretty decent and offered a decent service. Now it seems as though may not be as much on the up and up as we thought. So for this one, I'm honestly seeing more downside. Now, yes, I can see your resistance area here right around 50. Jeff was talking about right around here. So that's kind of what he was looking at. So definitely some resistance there. Actually, let's go with the yellow. I like the yellow better for our lines. So you could try and get in that. I don't know if you're going to have a lot of premium coming out of short puts that low on something like this that had that bad of news at this point. I would say that obviously we are approaching the oversold area. However, with a negative news catalyst like that, I'm not surprised. Honestly, I'm a little surprised that there was some dip buying down here as much as there was. I would have expected more of a red candle here over the last couple days since that report came out. So definitely a very bad report for SQ. And I mean, you can definitely do it, but if you are going to take a short put on SQ, make sure that you're ready to take delivery of those shares. That's the only thing I'm going to say, because I foresee more downside on this. So that seems like a bit of a risky short put to me. Again, you can try it. I don't think I would do it, especially with that negative catalyst. Honestly, I see more downside coming, even though they are approaching oversold at this point. All right, Sankit says, I need to leave for it, but I want to watch the recording later. Can you please discuss today about Netflix? It's going high, not understanding why. Hey, no problem, Jeff. Glad to talk about it. Question is, can we buy some, call, or put? Depends on the movement. Well, I mean, of course you can, but let's take a look at Netflix here. But yeah, SQ, I would be very careful, taking that. So I wouldn't say that SQ is really, or excuse me, Netflix is riding high right now. I'd say that, we've got a lot of positive earnings here. Earnings have been very good, and yet we're still getting wrecked here. I would say as far as Netflix is concerned with streaming, obviously it's not going anywhere soon. Everybody is using streaming instead of TV for the most part. I mean, let's be honest, that's just the truth. Looks like we've got earnings coming up here in, about 3 weeks. That's the day after my birthday. So there we go. Tuesday the 18th, we have earnings. Looks like we're estimating a very nice EPS. Let's see, where were we before? Little low last time. So we'll be interesting to see if that EPS is actually that high. But I mean, for Netflix, I would be a little more bullish on this than I would be bearish. I kind of feel that Netflix is is a little beat down here, and I think they were punished a little bit too harshly for that whole password, thing that they were trying to deal with. So me personally, yeah, I'm liking this more for a long as opposed to a short. Looking really good here, especially if we get past the 50 moving average, which is the teal line here, if I'm not mistaken. Yes, it is. So if we make a nice move over this, 335 area, which has been, a little bit area of a support and resistance in the past, if we make a nice move over that, I could definitely see this going up into earnings. I think Netflix is a little bit undervalued here in this 300 area. I think it should be a little bit higher than that. And, I wouldn't say we're super extended from the moving average, and RSI is looking pretty nice. So for me personally, yeah, I would like this more as a long play. But again, market conditions will dictate. We could have the greatest setup of all time. And, if the market pukes, then, well, this is going to probably go with it. But, with tech looking up and, streaming services being, definitely included in that area, I could definitely see Netflix making a bit of a move up. Now, that being said, if we have a hard rejection here of 335, then yeah, it definitely looks like it's got some downside. But there's definitely some support, coming up in this area here, probably right around 310 would be an area to keep an eye on, and then probably right around 300. I'm thinking would be some support levels before we hit the 200 simple moving average, which is starting to curl back up since we've been kind of grinding up here on Netflix lately. So yeah, Sankit, I like Netflix. It seems pretty good. Again, I think a lot of the controversy is kind of washed out of that security, and I think we're looking like we've got some more upside, in my opinion, if the market behaves. And that's really the important thing, because we have to keep an eye on not just the security that we're watching, but also what the market's doing. If the market pukes again, even here on Wednesday, you'll notice when the market was down, Netflix was down as well. So just one of those things to keep an eye on. But yeah, if we can get over this technical resistance area here, I think we have some space to go. I'm not sure if I would use options to play this, but again, that's just me. And that's my own personal preference. If you like using options to play this, or you want some further outdated options, definitely could be. I would not advise doing like weeklies or anything like that on Netflix, because I don't think you're going to get the moves that you need, except in earnings, and earnings is a coin toss, as we've come to understand. So great question, great ticker. I definitely like Netflix overall as a company. I think that they're doing just fine. I think they'll continue to do just fine. Of course, if they could get, if we could get The Witcher back, and Back with our good old Geralt of Rivia, but sadly he's moved on to Warhammer. So what can you do? So, but yeah, I like it. Looks pretty decent. And yeah, we're coming up right on here, around 20 minutes. Looks like I got somebody typing, so I'll go ahead and let them get that posted real quick. I'll take a quick drink. One thing to look for, coming up here this week is we're going to start releasing our watch list for the week for all of our elite members. That's something you're only going to get as an elite members. But Lloyd wants to know about Johnson & Johnson. All right, let's take a look. Ooh, Johnson & Johnson looks like they got demolished. Let's back it up here from a technical standpoint. Just looking to see what we've got. I mean, yeah, Johnson & Johnson definitely getting smacked around here. What do we have here? Okay, so nothing really interesting on the news from Johnson & Johnson to really tell me what's going on here. I'm not sure if they missed out on something or they just been selling off pretty hard. Let's see, dividends already paid out, so that's not something we need to be concerned about, though we do have earnings coming up here again on the 18th, so something to keep an eye on. Looks like estimates are pretty high for Johnson & Johnson. Looks like we've been doing pretty well as far as earnings are concerned. You know, Johnson & Johnson, a great staple company, so many different consumer staple products that you buy. I just washed my daughter's hair with Johnson & Johnson shampoo. So I definitely don't hate it at this position for a buy. Definitely looks like it has the potential to go. I would just be careful since we've been in this huge selling area. I would start small in this position, and if it looks like it's starting to perk up a lot more, you can always add to it. I think that's one thing that's really useful if you use a smaller position to start with, just in case you're wrong. Let's say that we have another sell-off here going into earnings, or you want to hold it through earnings and maybe we sell off. That way you can always average down to really kind of help your overall price and start building that position. Because the truth is, sometimes when we try and pick a stock like this, maybe we haven't picked the absolute bottom. Maybe there's more selling that needs to happen or that's going on with the company. But again, Johnson & Johnson not going anywhere. A great, company that produces goods for the betterment of humanity, whether, you think that or not. They are producing something that people are buying. And obviously the company is making money and making quite a lot of it. So they're not going anywhere anytime soon. So even if you have to hold this longer, you've got this, pretty nice dividend that gets paid out. I kind of like that quarterly dividend there. So even if you have to hold this longer term, I think it could be a good place to go ahead and start getting in on some J&J, especially if you can average in. Now, if we're looking at potential downside here, let's look at some major inflection points. Let's see. Let's look at stuff towards the downside. So we got something there, looks like. Let's make another one. It's not too significant, but maybe something there. So, if we're looking for more potential downside, we could look to these areas for some areas of support. But yeah, I mean, I like it. Johnson & Johnson looks pretty good here after this big selling spree. It seems like it's cooled off. We have been consolidating. So, I mean, if it holds this area, yeah, this would be a great spot to get in. I think this seems pretty solid. Again, your time horizon is another thing with a company like this, a blue chip stock. Whether you want to try and get like about $5 out of it, or you want to hold it longer and maybe go for about, 10 or so. Definitely something that you could do. It just may take a little bit longer to get there. But yeah, I like it overall. Seems like a pretty good spot, Lloyd, especially for a starter position. All right, well, I'm not seeing any other questions come in right now, so I want to go ahead and thank everybody for coming out to our live webinar. If you're not on the live webinar and watching the replay, again, make sure you hit that like and subscribe button on the YouTube channel. It does really help us grow the channel so that we can reach more people and traders who are looking for help. As I mentioned earlier, Riz has been getting messages left and right that people are just getting absolutely killed in this directionless market, and it's incredibly difficult to trade, especially when we have the index just jumping around and all of this indecision with these huge wicks. I mean, look at Thursday especially was really quite the whipsaw day, And Friday again, we were looking like we were going to go down, and then this huge buying pressure came in towards the end of the day. So very difficult to trade right now. So the best thing you can do is get as many resources as possible, and we try and give that to you here in Riz International. So do make sure you join the community. Get down in that comment section. Let us know what you think. What are you guys watching this week in the market? What are you looking to try and pick up as a potential setup? I'd love to hear from you, and we will see you in the market on Monday.